FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And we're going to be taking a look at understanding market behaviors. And we're going to start with our setups and our patterns that we actually trade on this channel. So without further ado, let's get started. All right, so on this one here, if we play this out, we're going to get a big false move to the high here. And then you can see basically looks like a first leg being created that was created here. And you can see on this one here, we get the crossover all the way down here. So if we're looking at this here, we're basically looking at, this is the M here, right? So first leg is all the way up here, came down. This bar here creates basically the up pattern for the second leg, and then it comes down here. Okay, so 15 pips stop loss, and then let's just say 30 pips is right here, so it gives you again about a 2-to-1 risk reward ratio. And we're using what? The 200 EMA as our take profit, right? So as we come down, of course, it literally comes down to the 200 and it passes it right here. Okay. So they don't always look pretty, but again, it just depends on what their behavior is for that day. But you know what the behavior is essentially of why they're doing this, right? You know why they're doing this behavior with that M. Okay. Remember, there's only 3 possible M's, 3 possible W's, right? There's this M like this. There's this M like this. And then there's this M like this, right? So why are the 3, what's the difference in the 3 different M's? Okay. The first one here, why this is created even, because they have buyers that come in here with this false move and they buy. Okay. And then they have retail traders, right, that are told what? Hey, buy in the retracement of a trend, right? So this is the retracement, so they buy here. Yeah. So they have 2 sets of buyers. They have a set of buyers here and a set of buyers here. Okay, so now this gives them basically all the buyers that they need, right? Because the buyers that are here in the retracement, what are they thinking? They're thinking that this is going to do this, right? We know better, and so we're expecting a rejection here, and then we trade that down. Okay, on the example here of why this one's shorter than this one, well, it's pretty simple. They induce traders to go long on this one here, on this leg. Okay. When they come back down and they go back up, they already have all of the traders that they need on this move. So if they go back up to here or anywhere higher, they basically allow these traders here that got stuck to go out on break-even trades. Okay, so they're willing to do this basically on this example because they have more traders that hopped on here. Okay, but once they have enough traders on the first leg, they don't need to come back up at all for the second leg. So that's why the second leg in some examples is going to be shorter than the first. Okay. And then the third reason here on this particular example is the same thing. So they trap traders with a buy here. Okay. They did not get enough traders. They didn't get enough traders to buy here. They didn't get enough. So what happens? They're like, you don't believe me we're going long? Okay, I'm going to show you long. And so boom, they do this. This entices the rest of the traders to go long again, to buy. Right? Now, very important aspect to this is that once this high here is penetrated and they go above it, there's a timer that starts. Okay, and we're talking about 30 to 45 minutes. So 30 to 45 minutes they have to come back down. Okay? You ever thought that you had an M formation like this and they went higher and then came down? Right? Well, that happens because they have a timer, right? 30 to 45 minutes. If it takes them longer than 30 to 45 minutes to do this, guess what? They're going to go up higher because they don't have what they need. Okay? And typically they'll go about 25 pips higher in general. 25 pips higher in one direction before they make another M. Okay? And the only reason that they're doing that is because they're not getting enough people to go long to what they need. All right? So that's why you see all the different patterns of the different M's. Regardless to us, okay, it's still the same. The second leg has to be in the London or the New York box, 5 and 13 cross. Okay. 5 and 13 cross, second leg in the box. The pattern of the M or W, the timing, which is the boxes, and the 5 and 13 crossover. Those are your entry rules. Pretty simple. Okay. Very simple entry rules. Your exits are also, again, very simple. If the EMAs are in your favor, you use them as take profits, right? Pretty simple. If the EMAs are not in your favor, then you're looking to get 30 pips if you're in the London session. If you're in the New York session, then you're looking for 20 pips. And again, 2-to-1 risk-reward ratio. It's very important that you get a 2-to-1 risk-reward ratio, because that's what's going to protect you when you have a losing trade. Because as long as you keep a 2-to-1 risk-reward ratio, it's going to keep you in the positive. So I can't stress the 2-to-1 risk-reward ratio enough. 2-to-1 risk-reward ratio. If there's no possible way for you to get a 2-to-1 risk-reward ratio, right, then you're not taking the trade. And so what I want you guys to understand is that knowing what the average daily range is on a pair is hugely important, right? Because if you know that pound USD moves 100 pips a day, right? Well, look, it's already moved 90 during London, another 29 during the during the Asian session. So what's the likelihood that this is going to move any more during the US? Right? It's not. It's really not. It's not going to move that much more during the US. Okay? Now, is that always perfect? Of course not. No. Sometimes news will hit and they'll move another, 50, 60 pips. Right? But in general, the idea is that they have a daily range that they need to meet. So if it's 100 pips and you move 90 during the London session and 29 during the Asian session, that's almost 120 pips right there. So you're already over your 100 pips for the day. So very likely, New York, you're not going to get anything. Okay? So if you're a trader that likes to trade New York, one of the things that I'd probably look for, right, that'll make trading a lot easier for you in New York, is look at what is the movement essentially What is the movement of the pips so far that's happened during the London and during the US session? So let's say if this is a 100 pip ADR, right? Daily average range, right? For pound USD. And let's say during London, it's only moved, let's say 50 pips. And during Asia, it moved, let's say 10 pips. Well, shit. Now I have 40 pips left over that I should be able to get possibly during the New York session. So then, yes, now it makes sense that I could potentially get some kind of trade possibility during the New York session, right? So if you just literally simply use that filter, right, when you go to New York session, if you're trading New York, that'll help you maximize essentially what potential setups or what potential pairs are going to give you the setups, right? All right, guys, so I hope that this video provided some value for you. I hope it gave you some insight into this particular setup. And so hopefully you'll become a better trader from it. Guys, if you like this type of content, please like and subscribe to the channel, and we will see you in the next video. Guys, if you need any more help or you like the content that we provide on this channel, come on over to the FXN Masterclass. It's available right now. What you get essentially is a lifetime membership, a full mentoring course, an advanced course. You get the Blue Summit videos, weekly Q&A sessions every Sunday, group session archives, which that by alone has about 100 hours of content, weekly analysis videos, midweek analysis videos, MT4 and MT5 indicators, a customized trading journal so you could actually journal your trades every day, and then a backtesting journal that you can use to backtest and collect all of your data. Not to mention a mentoring private chat, guys. So all the information is in the link in the description if you want to join now. We look forward to seeing you there, guys, and take care of yourselves.